You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, team? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Wednesday, 8th day of April, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, point any internet-connected browser to CFRN.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us streaming live during the show on YouTube, Facebook, and Twitter. So with that, let's open with a word of prayer. Father, we come to you in our weakness. We come to you in our fear. We come to you with trust, for you alone are our hope. We place this disease, this virus that's present in our world, we place it before you. We turn to you in time of our need. We pray, God, that you would bring wisdom to doctors, that you would give understanding to the scientists, that you would endow caregivers with compassion and generosity. God, we pray that you would bring healing to those who are ill, protect those who are most at risk. And we pray that you would give comfort to those who have lost a loved one. Welcome those who have passed into their eternal home. God, we ask that you stabilize our communities, unite us in our compassion, remove all fear from our hearts, fill us with confidence in your care. In Jesus' name, amen. All right, little audio difficulty, but hey, we're back. All right, if you can't see the screen, I've already gone over that. So let me put something on the screen. How's about we look at the daily chart of the S&P 500 Emini Futures. Here we go. This will be session number 3 above the BBC. This green line, as you know, bull bear cross. Prices above it, we anticipate higher prices. That makes us bullish. Prices below it, we're bearish. That means we anticipate lower prices. Now, could this be just a head fake? Boy, could it. Because we haven't taken out this swing high. If we take out this swing high, then the balance shifts in favor of the bulls, the buyers, but we haven't. Now, take a look at these 3 lows. Again, these are daily candles. These lows, this high, and this swing high. So if there was ever a definition of an important price, important area, I guess that qualifies. So what happens next? One of 2 things. Either we get a close above this swing high, or we close back below the BBC, which means we are now anticipating lower prices. If that happens, this should be good support till it isn't. And if we take out these swing lows, well, then we're looking at a run at the low put in on March 23rd. If we add some fibs to the picture, we'll go from this swing high to the swing low. We spent 1, 2, 3, 4 sessions at the 38% fib. We dropped to the 24. Now these are reverse fibs. Okay, I'll show you the current fibs on this leg up, but right now we're looking at this leg down from the high to the low. Okay, we bounced to the 38 and the BBC. Whenever you have 2 things come together, 2 important things, like a 38% fib on a daily chart and the BBC, that deserves a second look. Anytime you have congruence or 2 separate things pointing at the same important price, important area, always deserves a second look. So we go from the 38 down to the 24, back to the 38. Now, remember the other day, this was a big green candle. We were knocking on the door of the 50% fib retracement, but this was just yesterday. As you recall, we sold off into the close. We get back to the BBC, and when price approaches the BBC from above, we expect it to be good support. Just like over here, we expect it to be good resistance. We expect this to be good support. So far it has been. So really what we're watching for now, can this market rally? Can we get a close today above this swing high? If so, then we are going to begin a run at this important area right here. Price 32.53. That's the price at which the bearish cross, or 32.72, I called it up here, 32.72. That's an important price, important area. Price got below the BBC here, but then the bearish cross, that sort of seals the deal. That's the confirmation that yes, we are in a down move. Price is trying to print lower. If we do take out this swing high, then right here where we have the bullish cross, that will become an important price, important area. On a rally up, we expect this number, 32.72, to be good resistance. And if it turns out the other way, then this area right here where the cross took place, about 26.02, that will become an important price, important area. So that's the big picture. That's what we're looking at. Down here on the slingshot, we're still below the 50-yard line. And these colors here, I've already done this on some of my charts. Let me do it on this one. Let's see if I remember how. 50-yard line. What colors are there? Red and green. Oh yeah, right here. So I'm going to take that and make it white. And I take that one and make it white. Okay. So now you can see it's just the 50-yard line. So the cycle is below the 50-yard line, which is bearish. However, it's turned blue and started to point up ever so slightly. That's bullish. So we have a bullish setup below a bearish marker. All right. Now, I posed a question in Twitter this morning. Is trading anything more than a coin flip? Now, that question stemmed from a discussion that we had last night in the discussion group. And by the way, if you're on the trial, you're not taking advantage of that discussion group, you're really missing out on a big part of the trial because there you get to chat with other traders who've learned our methodology, learned our strategy, understand the indicators. They post their own charts. They show you what they see. They give you their narrative. And so we're always happy to see someone who comes in and starts participating in the discussion, because learning how to trade, it's not a spectator sport. Okay? It requires your active involvement if you're going to learn. Just sitting in a room, listening to somebody trade or watching somebody trade, it's not going to do it. You'll always be on the outside looking in. It's when you get involved, you start asking questions. Well, why did you say this? Why did you do that? Well, what does that mean? These very basic, simple questions, that's the beginning of your learning journey. Okay, so maybe you're shy by nature. It's okay. You don't have to say anything. Just type your question into the chat box. Now, that goes for the live training room as well as the show right here, right now. And it applies to the discussion group. Okay? When you ask questions, we answer Everybody learns. All right. Now, I posted a couple of scenarios last night, and I'll go into those in more detail a little bit later in the show. But I think I used the S&P as an example, might have been the NQ. But I showed what the high probability move was. I then came back and said, now, if the next high probability thing doesn't happen, that means something else has got to happen, right? Well, there's only two sides to a coin, and there's two sides to the trading equation. And I'll show you this in detail, but price is going to do one or the other. So while we teach you to learn to read the chart, to use the indicators to understand what the next high probability move is, again, there's times when the next high probability thing doesn't happen. So it's a real good idea to know that if that fails, well, then what happens? You're really prepared to trade when you understand both sides of the coin. We all know that if you flip a coin, in theory, it's going to come up heads 50% of the time. If you've ever tried it, it really doesn't usually work out that way, but in theory, statistically, that's how it should work out. You should get heads 50% of the time and tails 50% of the time. However, if you take that coin and get yourself some super glue and put a little bit of super glue on one side or the other, let it dry. It's not visible to the naked eye, but if you put that glue on the head side, you have now greatly changed the probability of whether or not that coin is going to land on heads or tails. It's a weighted coin. Some would say that's cheating. Well, it's not cheating in trading. It's great wisdom. Our version of the weighted coin, or the trick coin, is rooted in the fact that we have a definable edge. That's our super glue on the coin. Our methodology and our strategy provides you, the trader, with a definable edge. That's why we're able to say that there's a higher probability of this happening than this happening. But if the market throws us a surprise, which it does from time to time, and does the other thing instead of the thing we thought would happen, as long as we're prepared, well, we can ride, we can catch. We were planning to take the northbound bus, but we missed it or it didn't show up. We'll catch the southbound. With stocks, people tend to fall in love with the story, all that kind of stuff. With futures, there's no love story here. I mean, we love futures, but we don't fall in love with positions. We don't drag fundamentals in and say things like, well, you know, that must be the high because we just can't go any higher from here. Well, truth is, we can, and we often do. So I'll get into the definable edge. I'll show you in more detail. I'll show you the discussion we had last night. And as I'm talking, price creeping higher here on the S&P. All right, these are the numbers from around the world, cash markets, the indices as they're called. Starting in the U.S., the Dow currently up 576 points. It's a 2.5% gain. NASDAQ is up 154, 2% gain. S&P 500 up 62, 2.25%. And the Russell 2000 up 36, that's a 3% gain. In the commodity basket, crude oil up 71 cents, trading 24.34 last. It's hard to imagine that a gain of 71% or 71 cents is a 3% gain, but it is. Gold up $3.90. trading 1687.60 last. In the Asian markets, at the close, Nikkei up 400 points, 2%. Shanghai down 5, Hang Seng down 282. That's a drop on the Hang Seng of a little over 1%. And in the European markets at the close, FTSE down 26, DAX down 23, the CAC up 4. So very quiet trading in the UK. Now that gives us a mixed day in Asia, mixed day in the UK. But so far, it's a big green or Radio Wednesday here in the US of A. Let me check. I got something in the chat box. Khalil asked, are we not getting a bullish cross here on the daily chart? Absolutely. It hasn't crossed yet, but it's at the point. That's a good observation, Khalil. This blue line will actually cross, like up here, you can see on the bearish cross. So we're right at that point where one of two things happens. Price trades higher, which gives us the bullish cross, or something happens this afternoon since price is lower, and then this will hook around like up here, turn red, then guide us back to prices below. But that's a great question. Thank you very much. Okay. With all that said, let's go to Michael, get a recap of what happened in the live training room this morning. When he's done, I'll be back. We'll cover the Logic 247 alerts, the Concierge Trade Alerts. We'll talk some more about the two sides of the coin. And while Michael's doing the recap, I will reach out to John and see. He was under the weather yesterday. We'll see how he's feeling today. And if he's feeling better, then he will join us for the show. So Michael, I think I see your charts. I do.
You do indeed.
And it's all yours. Locked and loaded.
Okay.
Okay.
I got it.
All right.
All right. Good afternoon, everyone. Today is Wednesday, the 8th day of April, 2020. 8th day of April already. I swear it goes by so much faster when you're older. Today, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. And what is the ES trading at? 27. And over here in the right-hand column is 5-day free trial. Apply.cfrn.net. You can click on that, or you can click on any one of these other ones that say free 5-day trial. And it will bring you right here to this page, eminitrainingschool.com. Now you can go directly to eminitrainingschool.com if you want to. On this page, there's a bunch of information for you to read. We try not to clutter it up with too much information because, like, the CFRN.net website has it's like 2,000 pages. The 1 week free trial, all we ask for is your name, your email, your phone number. You can tell us because Trading Challenge, we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of April, 2020. We made 11 ticks on Crude and 20 ticks on the ES. That's 2 days in a row we made 20 ticks on the ES. So we're up $360 a contract this morning. Today it took 3 minutes and 2 trades to get to the goal for the day. At that point, we're up $200 per contract, and we took a total of 7 trades this morning. So on the month, we are on our 6th day of the month. We're up $2,853 per contract. That's that's $475 average per day. On the year, we are now at $24,827 per contract. That's over 64 days, averaging $387 per contract per day. Okay. Now, our mantra is that you achieve your goal for the day and then put the mouse away. Okay. Now, again, today the markets were kind of wild. I didn't trade anything on gold but I did highlight some trades, some areas where it was tradable, but it still had a 2-tick spread today, so I just left it alone. It slowed down a little bit now. I can see we have a little bit more volume right now, probably twice as much as we had earlier. That means, moves like this are less likely to happen. Okay, because the volume's on the bid and the ask. It's not just on the bid or not just on the ask. And it looks like you probably put a two contract trade on without too much slippage. All right, well, there were a bunch of trades in here. Now there's one right here. This is textbook right here. Bounce off the BBC. One right over here. There. Okay, now just look down here at the slingshot. Okay, and it's telling you the whole story. So I'm going to look at the slingshot, then look up here at price and see if we actually had a trade set up. We didn't in this case. We did right here. See that? We did right here. We did right there. We did right here. Nope. We did right there. Right here. And that was it for the morning session. During the break, there wasn't really a lot of action during the break. Well, we went up and we came down. We had one trade set up right here during the break. Okay, so that was gold today. Now the euro, we didn't trade the euro today either, but I'll show you why. Look at this right here. All of that garbage, all the way up to here where it finally broke down. And then we had one trade set up right here. I guess we had a follow-up trade right there, but the first one was right there. Second one was there. We had a trade over here that ended up being a break-even trade. And we got into the break. Now during the break, well, we had a trade set up there, and that was it. So the euro was just a mess today. Okay, we had crude inventories come out today, and again, it was a huge miss. A huge miss. Nobody's traveling. Airplanes are staying on the ground. So it's just not getting used. We had, let's see. Let me go to this page and then go to this page. 9.8 million was the forecast, a build of 9.8 million, and we got a build of 15.2 million. So we are stockpiling crude oil right now. Slide this back over here. Well, I guess I can leave it here. All right, so on crude, on our first trade, we picked up 4 ticks. Yeah, we picked up 4 ticks on the first trade. Then we picked up 6 ticks on the second trade. Then we missed one. And we picked up. Oh, you know what? Hang on. I didn't log one of these. I think it was this one. That was a couple of ticks, I think. And this one was 4 ticks. And this one was 6 ticks. And let's see. I'm looking down at the slingshot to see where the trades are coming in. This one was 1 tick. We missed there, we missed there, we missed there. We missed there. That one would have been a stop out. And that was it for the morning session, really, guys. You have a little bit of a head and shoulders pattern here. I don't know if you see that. Then when it broke the neckline, which is right here, it really made a nice down move. But this is during the break. Okay, you see right here, slingshot. And that was pretty much it for the day on crude. The ES was nutty again today. So I'm just going to go over the trades that we did on the ES. Okay? Because there were so many opportunities that I'd be here, well, forever. When did I draw that? I must have drawn it from a higher time frame. Just want to make sure it was still today. Okay, our first trade was right here. We ended up with a break even on that one. The second one was right here. We picked up 16 ticks. I'll look down here at the slingshot because that's what's going to tell the story. And you know, there are just so many trade opportunities there. In here, we picked up, what did we pick up? 4 more ticks right there to put us at plus 20. And then we didn't trade the ES anymore in the morning session. There was a nice shorting opportunity right there. And look down here at the slingshot. See, you want to have separation between the green line and the cycle. Okay, over here was a shorting opportunity. A long opportunity. Another long opportunity. Man, I'm trying to scroll right now. Dennis, which trial are you trying to get into? There's a shorting opportunity. Okay, well, let's get into the break now. Let me put that back. Okay. All right, here we go. Back to this. If you were going to read the spreadsheet, you could read all the CFTC risk disclosures at the bottom. Today's the 8th day of April, 2020. We made 11 ticks in crude and 20 ticks on the ES. Put us at plus 360 per contract in the 2 hours this morning. Today it took 3 minutes and 2 trades to get to $200 a contract, and we took a total of 7 trades. So on the month now, we're at $2,853. That's over 6 days, averaging $475 per contract per 2-hour day. And I miss most of them. On the year, we're at $24,827. That's over 64 days, averaging $387 per contract per day. If you have not taken the free trial, go here to the home page. Go here to the home page at CFRN.net. And it says right here, free 5-day trial. No credit card required. Click on that, and you'll be brought here. Or on this page, all we ask for is your name, your email, your phone number. and tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay, so 7-day trial, Dennis? I don't know about that one. But is it the Logic 24/7 trial that you want to do?
I don't know. I sent him. He said that he was wanted to take the trial, and I
Okay.
told him he had not gotten a. In,
Yeah,
but I
it's 5
sent him a Emini.
It's a 5-day. Yes. Right. One business week. Just go here, eminitrainingschool.com, and fill out this little form. That's all you need to do. And then you'll automatically be sent the information. Okay? And we may double it up and send it to you again. Okay? All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Studio A.
Three trials in one, or maybe 4, because you get a trial
Yeah.
of the live room. That's where we teach our core methodology. Michael's there every day, Monday through Friday, 9:30 to 11:30 a.m., saying the same stuff he said 7 years ago. Why would he still be saying the same thing he said way back then? Because the markets operate on some very certain basic principles, and until those principles change, well, there's nothing different to say. We just keep teaching those same principles to all who actually want to learn how to trade. Now, there's 2 kinds of folks out there. There's the folks that want to get some indicators, put them on a chart, and when the thing, whatever the thing is, says buy, they buy, or when it says sell, they sell, and it's kind of like a trained circus act or something. And that's not trading. I'm sorry, but it kind of looks appealing and attractive, and I think we were all drawn to that type of thing at some point in our journey to learn how to trade. But learning how to trade is a very different thing. It's understanding what these candles on the chart are telling you about the people who move the markets. And the people who move the markets are simply the buyers and the sellers. Let me grab these charts. Recap of the recap.
Today it took 3 minutes and 2 trades to get to $200 per contract.
That's a good bingo. I spoke to John. He's feeling a little
Second
better.
trade, he's in.
Is he?
So-
Okay. Yeah. And
Yeah.
Garrett's going to join us at the top of the hour.
Okay, so I'll open John's mic up right now.
Okay. So, guys, what we'll do, we'll talk to John. We'll talk to Garrett. But also, we're going to talk about the 2 sides of the coin and how we weight that coin, how we create a definable edge. And once you understand how to do that, it then becomes just a simple matter of showing up to work every day, putting on and taking off trades until you reach your goal, whatever that is. John, welcome to the show. Glad you're feeling better.
Yeah, thanks very much for bringing us on. Listen, the fact I was, even though I didn't come on the show yesterday, I was kind of watching things before that. I didn't feel too good in the afternoon, but in the morning I actually told a few people what I thought was going to happen, which was that there was going to be a fairly sharp sell-off down, into the night, and would possibly rebound today, because ahead of the Easter weekend, because it's just normally what markets do. They tend to rally into Friday, Good Friday.
We've not talked about that. The markets will be closed Friday, or do they close at noon?
Friday. Friday. I'm not sure if they're going to close. I think they're going to close the regular time on
Michael,
Thursday.
is it a norm? Well, yeah, on Thursday. But Michael, are the markets closed all day
No,
Friday?
they're closed on Friday. They're closed on Friday.
All day. Okay.
Oh, are they closed all day on Friday? Okay.
Yeah. Yeah.
Yeah, I think it's changed. It was noon, and now I think it's just all day.
Okay.
Open again Sunday at 5.
Wow, so we only have one more trading day this week.
Yeah.
Do we have a Fed announcement
So-
this afternoon?
No.
Don't think so.
We have 30-year bond sales.
Okay. When is the Fed announcement? Is that next week?
So anyway, the
I'll look it up.
it was an interesting article or thing this morning. This Mnuchin, is saving the world. Certainly saving the financial world, that's for sure. I think they're talking about 50-year bonds for funding this $2 trillion. Incidentally, the debt has already gone to 24 trillion. It's 23.9, 24 trillion already. What's incredible was, because you've heard me talking about it before, a month ago, the projected debt for 2023, 2024 was going to be 30 trillion. Now it's 35 trillion already. So this pullback in gold, the next buying opportunity it presents, it's probably going to go back up and take out that 1750, 1740 it hit yesterday, and the silver north of 16 is probably going to be a sustained run to the upside, possibly taking us to 1900. You heard me talk about Twitter a while back. So we'll buy the dip situation, which we've been doing ourselves. I actually bought Twitter on Friday last week, and it's really taking off with the vengeance. There's a very good chance Twitter get taken over. I mean, if you were seriously going to take over Twitter, if you don't take it over now, you'll never get it so cheap again. I mean, it's kind of a no-brainer, don't you think?
Who do you think would be a good candidate to buy them? Microsoft?
Hopefully, right now, Elliott Management or Elliott Paul Singer is. I don't think he wants to let anybody else have it. So I would say he's probably a number one contender. But I believe there could be a bidding war for Twitter, possibly between Microsoft, Google, and some others. I mean, Twitter is here to stay. It's getting bigger and bigger, and I noticed yesterday that Facebook was acting very strong before the sell-off, right? And it's back up again today. Facebook, Twitter, Google, Amazon are all acting very, very. All the FANGs are acting very, very strong. Microsoft as well, because this crisis is actually, in many respects may result in higher than expected results. Better than expected results, and if if they get these bailouts, I mean, the government, people don't realize, why is the market going up? The market's going up because they basically had a stopgap measure that's, for a lot of companies, is better than actually normal operating returns. So the bridge that's bridging them over the next quarter or two is probably going to be better than they would normally report. So I mean, there's a very good chance they're going to have all kinds of upside surprises in the reporting of. Not sure about this quarter, but the next quarter could be remarkable. And
here's the daily chart on Twitter.
And there'll be a lot of upside surprises in different. It's really, I mean, look, so far so good. I mean, obviously today's low would be somewhere to put a stop on this thing, or even a bit higher. I would move the stop up on Twitter accordingly. But it is the sort of situation. I mean, look, we're getting up towards that previous gap, right? And if we gap up through there, I mean, this thing going to really, really go, 30 into the 30s pretty quick. And I mean, if you look at, do you want to put up Amazon, Dwayne? Because sure. Amazon looks phenomenal. I mean, it's back over 2,000, I think.
It is.
Look at that.
Yes,
you know,
it is.
That just looks fantastic. And look at that gap. I mean, you know, imagine if Amazon gapped up through 21, you know, could happen. That would be an island bottom, the mother of all island bottoms. I mean, you know.
What was this
just
I heard
being-
about them halting their delivery service that competes with UPS and FedEx?
Don't know.
Well, that's kind of a
the,
big deal because they just had a bunch of entrepreneurs start up these little shipping businesses where they literally put people into business. If you qualified, they gave you a fleet of little vans.
Oh, yeah.
and-
We talked about that before. Yeah.
Yeah. And now they're going to stop it.
Look,
Amazon stops.
if they're hiring 100,000 people, I mean, there must be just incredible demand for everything they're doing. So
Amazon to suspend delivery service with Amazon to suspend delivery service. with
maybe they're doing
UPS
that. You know,
and
that
FedEx.
particular service we talked about. Maybe they're doing that. You know, just to kind of, you know, conserve cash or whatever at the moment, just like to lay people off, because you know they're probably not getting, while they're doing a lot of extra business, they're probably, you know, the regular business for no ordinary things might be a lot less.
Oh, I see.
For-
They have a service. I didn't know this that handles non-Amazon packages.
Oh, okay.
Amazon shipping is available in a handful of U.S. cities, including L.A., and handles non-Amazon. Interesting.
Can you put the NASDAQ up for a minute?
Sure. You know, the futures?
Yeah.
Okay.
Yeah, look, I mean, taking out that doji from yesterday is a really, really big deal. Sorry, that's the daily, right?
That is the daily, yeah. And
Yeah,
we have the same kind of a candle on the daily chart of the S&P for yesterday.
Yeah, I mean, look, in all likelihood, if we're sort of threatening or taking out the highs by tomorrow, going into this weekend, it's a very good chance this NASDAQ could gap up next week, and potentially a lot of stocks with it. So, you know, it's still a little bit of a double-edged sword. You know, obviously, if there's a downturn for any reason, that would be an opposite effect. But right now, the market's kind of like, I mean, look, you know, we were up, what, 800,000 or 900,000. I mean, any day you lose 800 or 900 points in the Dow and go negative, or, you know, slightly negative as it turns out, is certainly, you know, 9 times out of 10, that's very negative. You know, you would expect to be down today, but we're not. We're up, and we're taking it all back, and so we're kind of putting in what I call a double daily reversal, and these things are very, very powerful drivers, very, very powerful indicators. Also, Intel and some of these semiconductors are acting really, really well, and the you know, the pharmaceutical sector, you know, some of these vaccine drugs are pulling back a little bit here, but I think they're probably going to take another swing to the upside soon. So just I want to say a few words. You know, Trump is, I don't know how people can be hammering this guy for, you know, the good things that he's trying to do for everybody. It doesn't make any sense. But he's remember, you know, when he was said his phones were tapped in Trump Tower, you know, everybody said, oh, it's impossible, it could never happen, all this. You know, I mean, they've been tapping this guy since like 2015 or earlier. And they've been, you know, the things that have been going are just mind-boggling. I said a long time ago, the Mueller investigation basically took the names out of the phone book in Moscow or out of a military roster. And it just literally trumped up charges and indictments that basically have been thrown out, you know, and most of the charges, you know, the indictments were technical issues of allegedly lying and this sort of nonsense. So, you know, there was a couple of, at the end of the day, there were 2 or 3 legitimate, potentially legitimate, charges. So the rest of it was thrown out. The whole thing was a hoax. The whole Russia thing was a hoax. Nobody talks about Russia anymore. So it's it's
isn't
crazy.
it amazing how everything was Russia, and then radio
just
silence.
1 second. Listen, I got to duck out for a second. I'll be right back.
Yeah, go ahead, John. We got it. All right, guys. Again, top of the hour. Garrett's going to join us here in about 5 minutes. Real quick on the NQ, the initial alert last night to be long. This is from the Concierge Trade Alerts. If you didn't grab a screenshot, go ahead. See the NQ here, 81.24. Okay, so the first move is worth about $380 per contract traded, and then this next move right here, this took us up to 81.54. So that's a 30-point move at $20 per point. So the market made $600 per contract available. Price then got back below the trigger, triggered again, took us up to our trade to target. That is the highest weekly trading zone right there for the NQ. So 71 minus 24 is 47. So from the entry to the final trade to target, 47 points at $20 a point. It's $940 per contract traded. Important prices, important areas are almost always tested. Now you'll see that with our alerts, both the Concierge and the Logic. This is not unusual to see an alert trigger 3 times in one session. Last Friday, the Dow triggered 13 times. I showed this to you yesterday, the day before. I showed you the chart. The Dow triggered 13 times off of one alert. Go ahead, John.
Yeah, look, just to put a caveat on what I said just now, because this market is very tricky. The particular structure there is such that if we were to break down from here, it could turn bad. So keep that in mind. It's no guarantees.
Now on this daily chart of the S&P, that little doji, like the one you just pointed out on that stock, we got the same situation. Now this green candle, if we can close above the high of yesterday, then that negates the sell-off we had yesterday afternoon and opens the door for higher prices.
For a big upside.
If we fail, here though, that's not going to be good.
It'd be devastating. We're probably going to go down and test the lows. So we're kind of at a critical point. And it may be the VIXs were up a little bit yesterday. They're off again today. You got to be very careful of these VIXs. If they suddenly start going up, they could spell trouble for the market. The gold going up to new highs could also potentially still spell trouble for the market. So, going back to Trump, right now those things are really negative. So that's kind of bullish for the market. The fact that the VIXs are breaking down, and actually the interest rates are rising a little bit, indicating a kind of a potentially stronger economy than maybe we can put up the bonds just to get a sense of where they are doing. 30-year bonds.
Let's go. 30-year bonds right here. That's a daily chart.
Okay, so you can see how we've gone from, the big, where we were. Well, that's the yield. Sorry, that's the yield, right? I thought we were going to. So to see how the yield is.
You want to just look at
so we had an extreme low yield, like a month ago, right? And so now the yield is starting to rise. I mean, that's actually kind of a positive sign for the market. So, in other words, the higher that goes, the more normal things are likely to be. the Wuhan just opened up yesterday with a lot
Now,
of
did
fanfare.
that take you by surprise?
Not particularly.
No?
I think the Chinese want to stick it to the rest of the world now, kind of saying, oh, we beat it and we won and all that.
Do you,
At what cost?
do you know what the population is of Wuhan? I did not know this. This blew me away. I thought
30
for some reason, I had this mental picture of Wuhan as being, some small town in China. It's got a population of 11 million.
11 million, yeah. Some of these cities over there are 30 million. There's some few of them. That
New York City only has 8.5.
Dwayne, there's 100 cities in China with more than 10 million population.
I guess I need to study my geography books.
Anyway, so look, I think when history is recorded, there's going to be a lot of blame on people like the Democrats for their disgraceful behavior over this treatment. Trump has mentioned quite a few times, justifiably so. And he says, look, he's not a doctor, he's just using common sense. With the largest number of deaths last night, how many of those were preventable? They should have been giving these things out at fire stations, with doctors. They should have just said, listen, this is working, this may work, if it doesn't appear to have any side effects. Come and get it. Doctors will issue it to you. They should have been doing this months ago. The hospitals would probably be empty today if that had happened. Think about it.
Mm-hmm.
I mean, it's just unbelievable. Look, there was a thing. I hope they run it again. There was a thing on Fox. I'm not sure whether you can find it on YouTube or not, but about a pandemic, and it was very well done because it talked about this 1917 flu and 18 flu. And then there was a scare in the mid-70s, and they actually inoculated about 40 million people, and really it was a false alarm. I mean, if they went to the trouble of inoculating 40 million people on the fear of a pandemic, and here we have a real one, and people are not getting something into the hands of people that could potentially save their lives, it's an absolute outrage. It really is. And it's another thing that, look, the Chinese are what's the word?
Diabolical?
Negligent. No, almost negligent in not, first of all, in not letting the CDC come a long time ago.
Sure. No, I agree.
Listen, the World Health Organization is negligent because they should have said, we're opening up this to the whole world and everywhere. As far, we're ramping all this ramping up of all this equipment. They should have been ramping up these medicines for 1 billion people and billions of people to get it. Because if it stops, if it saves one life, it's worth it. But it's going to save countless lives, million, potentially hundreds of thousands of lives. With the World Health Organization, instead of trying to bury this under the carpet, it should have been out there at the forefront of preventing the disaster that's happened. And the Chinese, listen, if they are now saying that Ativan is their number one treatment, how come, Xi didn't tell Trump, or how come they haven't been sending it over to here? Well, it doesn't make any sense.
Right.
And this new thing, the Ivectorim, I mean, listen, if this thing works, and it looks like it does, Ivectorim, I think
IVEC?
Yeah.
IVEC, Ivectorim. Do you mean Ivectorim?
That's the one.
Okay.
Yeah, Ivectorim. That's the one. Ivermectin.
Is this something that was used for the treatment of...
Ivermectin. That's the one, Dwayne.
Ivermectin, okay.
Yeah. I mean, it's a parasite killer. The virus is a parasite.
Is this also one that's used for head lice? When kids get head lice at school? I saw a headline last night that said there's some head lice medication that they have found helpful. Huh. Does not kill the adult worm. Therefore, it will not cure this type of infection, according to this. All right. Well, here we go. For code parasite drug shows early promise. 21 hours. Oh, there was the one about the head lice. If you've got kids, you've probably dealt with it. Could a head lice drug hold the key to treating coronavirus? Still too soon to know. It's used topically in creams and lotions for head lice, as well as in tablet form to treat roundworm, scabies, and rosacea. Anti-parasitic agent, isolated in the 70s. Wow, that's what those little boogers look like under a microscope. All right. Okay, so back to the NQ. We covered that right here. All right, so the long trigger for the Concierge Trade Alert. We have two different alerts. The Concierge Trade Alerts. Okay, John's back. He must have got kicked off. So let me open his mic back up. John, it says you're muted on your end. Okay, now your microphone disappeared altogether. He may have lost his internet connection. All right, John, well, I'll keep an eye out, and when you pop back in. Garrett, are you here? When you get here, type something in the chat box. And John, I'll watch for you to reappear. I see he logged out. He's going to try to log back in. Okay, so on the NQ, the Concierge Trade Alert. Concierge Trade Alerts. This is a static report. It comes out to our traders every night shortly after the Globex Open. Last night it was a little later, 8:45 p.m. Eastern. When these come out, you go to your chart, you put two lines in the sand. Put the long line, the short line. Everything in between is the market trying to make up its mind for what it wants to do. So the first trigger was good for $380 per contract traded. Next trigger, good for $600 per contract traded. Then the third trigger, good for $940 per contract traded. And 81.71 was the final trade to target. Both with the Concierge and the logic alerts. The logic alerts I'll go over in a moment. Those are based on current price action. The Concierge is previous price action. Logic, current price action. And when those two different methods point a finger at the same important price, important area, you better believe that's worth a second look. Okay? Now, let's jump to the ES. On the ES, last night's alert was to be long 26.84. 26.84. Still checking. 26.84. All right, there we go. $26.84. Okay, this first little pop up took us up, looks like 4 3/4 points. Price pulls back to the VBC, where we expect to find good support. When approached from above, think support. When approached from below, think resistance. This next move took us up to 27.21. So that's 16 and 21, that's 37 points, if I did the math right. Alexa, 37 times 50. Alexa, 37 times 50.
37 times 50 is 1,850.
All right. $1,800 potential in this move so far. Okay. We don't have an exit signal as of yet. So you may have chosen to take profit anywhere along the way. You may still be in it waiting for the exit signal. Now at 27.20, we're already above the highest weekly trading zone. The highest weekly trading zone for this week is 26.96. Go ahead and put that on this chart. 26.96. Now, on a long trade, whether it's the Concierge or the Logic, 26.96. If it's a long, the trade to target is the weekly trading zone overhead. If it's a short alert, the trade to target, the final target, is the weekly trading zone below. Okay, so we went from 84 up to, if you got out at the zone, nothing wrong with that, because that is the trade to target. So from 84 to 96, that's $1,250, $600 per contract traded. However, if you were waiting for the exit signal, which will be after the step line crosses over and we get a red close below that step line, that's the chart telling you this move is over. It's worth talking about this for a moment. When you're in a trade, and on the logic alerts, let me just show you what we're looking at. Let me see if we have a current recap on those. Let's see. Yes, we do. Thank you, Valerie. Okay. All right. As of right now, we're in week 88 of the logic alerts. Remember, these are the ones based on current price action. 41 alerts have been issued. 8, we're still waiting for a disposition. 3 never triggered. We've given up on those and moved on. So we've had 30 actionable alerts. 4 of those have been stopped out. So that's 13% of the logic alerts so far this week have been stopped out. We average on a weekly basis 20% being stopped out. Okay. John, I see that you've logged back in, but you don't have a little microphone symbol by your name. So you may need to reconnect your mic or log out and log back in. Khalil, your question, were we stopped out on the first attempt? Oh, there's Garrett. Garrett, I'll get your mic open in just a second. Which one are you talking about, Khalil? You talking about the S&P or the NQ? Here, Garrett, let me get your mic open. Oh, Garrett, I don't see a microphone by your name either. Garrett says I can't hear anything. What in the world's going on? Let me call Garrett. I'll ring him up.
Hey, Dwayne.
Yeah, I see you logged in, but there's no little microphone showing up by your name. So, and John, he lost audio. He's logged in, but I don't see a little microphone beside his name either. So I don't know if it's an issue with the GoToWebinar software or not.
I'm going to try to log in again.
Okay.
Just to see,
All right.
if that'll do it.
Yeah, check it out. Because I'm looking at other people, and they've got, even though their mics are muted, some people have little microphone by their name, and some people just don't have.
Okay.
And now Tim is telling me he doesn't have audio. So.
Yeah, I see a microphone, but there's no, there's nothing. Let me click on it. Oh, that when I click on it, it's muted, but there's no sound wave after it.
Yeah, and Kevin said that audio is going in and out for him.
Oh, here's sound check.
How about the rest of you guys? Can you guys hear me? Not hear me?
Now,
Somebody give me a sound check.
Sound check. And it seems to be working now. It says I'm muted.
Brett says he can hear. Okay. Yeah, maybe it was just a momentary glitch. Let me find you again, and I'll try opening your mic again.
Can you hear me now?
I hear you on the phone. Okay, I just opened your mic.
Oh, okay. How about now?
Garrett, you've got a green mic, but I don't hear you, brother. Your microphone is open. And John, who's listening through YouTube, says the audio sounds good over there. Alex here says, I got a lot of loud and clears. Yeah, Garrett, you definitely got an open mic. Well, maybe try logging out one more time, and hopefully that'll work. Okay, so back to the let me go back to, there was a question from Khalil. Let me see, where'd that go? A bunch of people typed in no audio for a minute, but now people are saying that they've got audio back, so sorry for that. Okay, so now Khalil, I'm back to your question. Where we stopped out on the first attempt, tell me if you're talking about the NQ or the S&P. Okay, Garrett. Now, Garrett, your microphone's disappeared again. Valerie, could you send him a hot link, perhaps? So that he comes in live? Do you...
I haven't changed anything. However you send the radio.
Oh, okay. Okay, so then he should have come in on a hot link. Okay. All right. All right, well. All right, let's just keep going. Garrett, I don't know what to do, brother. It's almost like your microphone's unplugged now because it doesn't even show up. All right. So, Khalil, maybe you can't hear me. I'm still waiting on an answer from you. All right, let's just keep moving. So, 2684. Okay. Now, your question might have been on this one, okay, where you stopped out before you got to 2696. Possibly, yeah. I mean, it depends upon what your goal was, what you were looking for, where your stop loss was set. We use market structure. We don't use the 8-tick stop loss the way we do in the live training room with the alerts, because we're using a bigger time frame. There's larger profit opportunities, and with that comes larger risk. On the concierge and the logic, we don't want to risk more than $300 per contract per trade. Okay, Garrett says he hears me now, and I just opened your mic again, Garrett. Let's try it again.
It says unmuted.
Beautiful.
Can you hear me now?
I hear you now.
Hey, there you go.
Thanks.
Everybody's back.
Yay, the gang's all here. Okay.
Great. Let's see. I had a few charts I could show you if you wanted.
You bet. I'll send them right over. Guys, after we talk to Garrett, we'll pick up where we left off with the recap on the alerts. Let me make Garrett a presenter. Okay. All right. There they are. I can see it. Quick update. April 7th, 2020, the new China trade agreement.
Yeah, let's see, let me try and move this thing on my other screen. Oh, cool. Okay.
Yeah, the little drag around.
Yeah, I did what I did is a little update, and the kind of the point of this update was just kind of taking a look at what's going on. I mean, we had what was it, 35.4% retracement.
Okay.
Which is pretty good little retracement. A lot of people are not only out of work, they're out of work permanently now, or at least they're not being able to go back to their jobs. And you had a certain percentage of the country prior to Trump. The percentage was pretty meaningful of people that were like a paycheck away from insolvency.
Exactly.
Well, you've got a lot of people now that have been out of work for a while, and for that group that was away from insolvency, a paycheck away, a lot of those people are insolvent. What happens?
They are there now. Absolutely, you're right.
Yeah, exactly. And what happens is that people don't realize is a lot of the people that, for example, people that are paying rent.
Mm-hmm.
Well, the people that they're paying it to, their landlords. All of a sudden, their landlords are, they're in pretty good shape because they're getting everybody's check a month. But what happens when that check stops coming in? There may be another shelf of people that is, 2, 3, 4 paychecks away from insolvency.
Right.
So this kind of comes up the ladder, and this is going to affect the situation in a big way. The economy, even if the economy gets back, it's not going to get back to full steam. If it was early in the cycle, that I think is a possibility. But at this late in the cycle, this being the longest bull market, supposedly the longest bull market in history, I don't think it really is, but the way a lot of people counted, it's the longest bull market in history. So let's give them the benefit of a doubt. That being the case, this thing has been going on for that, and the fact that this was a manufactured bull market. And what I mean by that is Obama was the luckiest president in history. He complained, "Oh, gee, I was given a bad economy." What could be better if you're a president? If you're a president and you want to come in with a great economy behind you, you're too stupid to be president. Right? In other words, if you come in and the guy before you is doing just a magnificent job and you're starting at the top, things are cyclical. They don't last.
Right. So
if you come in at the bottom of a recession, which is exactly what Obama did, you don't get luckier than that. What do you compare with? You compare with the depths of a recession. And what did they do? They helped him out more than any other president.
Oh my goodness.
They gave him multiple QEs, Operation Twist, all sorts of stuff. And then they dropped interest rates even further down. And then they threw a whole bunch of money at them, which is what QE is. They threw a whole bunch of money at things. So they made, obviously the guy had no prior work experience, so I'm sure they figured they had to help him out, but they did. Point is that they helped him out immeasurably, and therefore we have a quote unquote manufactured bull market.
Some politicians have never, ran a business. That guy never had a job.
Not very many.
That guy never had a job.
Yeah, never had a real job. He had jobs as literally when you put on your resume community organizer, it's like you got to be kidding. That's the thing that you don't put on your resume.
That's like saying
You know,
I work
hopefully,
well with people. Yeah, folks, don't ever put that on your resume because that's
yeah,
just,
yeah.
you got nothing
I mean,
to offer.
he can't put down hot dog stand, which would actually be more impressive. Anyway, some people, I have had otherwise intelligent people sit across from me and tell me that he was their favorite president because he was the best president ever. And I'm like, what? You know, I'm like, you've got to be kidding. I said, I don't even care if you're a lifelong Democrat, you know, because it's not about being a Republican or a Democrat. It's about evaluating the job of a president. And you don't, realistically, we shouldn't do that from a point of, gee, I'm a Republican or I'm a Democrat. That really shouldn't come into the picture when you evaluate presidents. You ought to be able to list presidents that were underwhelming that are Republicans or Democrats, or at least be able to list them in some sort of an order of, you know, how well they did, you know, based on any number of things.
Yeah.
You know, one of them would be, you know, gee, if they had a good economy and no challenges, how well do you have to do? But take a guy who's given some, you know, JFK had lots of things that he had to deal with, you know, the Cuba crisis and so forth. Reagan had a lot of things to deal with, and boy, Trump has had more things to deal with in many respects than anybody, and you know, he's got a stacked deck against him. So I think you can say, you know, gee, I don't like Trump for whatever reason, or gee, I don't like his personality. Well, this isn't I mean, unfortunately, becoming a president has become a personality contest, which it should never be.
No,
I mean, in other words,
but
you know,
imagine the weight of waking up every day knowing that you're the, you know, most hated man in America, or perhaps the most hated man in the world for no good reason. I mean, he's got his
for no
fans,
good
he's got
reason,
his supporters.
and within your own country, I mean, it's just it's ridiculous. I mean, there was reason to not like Obama, and I mean,
there was you know, sound reasons.
But he becomes popular because he's got a nice smile and can read from the teleprompter. Have you ever seen this guy when his teleprompter goes out?
Oh, that's a nightmare, yeah.
Oh my gosh! I mean, it's like like Trump doesn't need a teleprompter. He's just here, take it, you know. But anyway, I for whatever reason, you know, this is the way the good Lord gave it to us, right?
That's right.
So I assume he knows what he's doing. So
he does.
Anyway, what I was going to point out here, this is just something I got out to clients. I mentioned that. Just reading through it from the Christmas low of 2018, all we heard about was the China trade agreement. You know, the China trade agreement will be signed any day now. Mm-hmm. And whenever you heard that, the market rallied. Right. And the problem is it did it for at least a year and a half. I mean, from that Christmas low, you know, all they talked about was the China trade agreement. And it seemed to rally every time they talked about it. Theoretically, you know, you only get to discount something once, but they discounted it, what, 150 times? Yeah. Anyway, they discounted it for a total of 1,047 S&P points. And my thought people would say, well, gosh, there was other things going on in the economy. It wasn't just the China trade agreement. And my comment would be, really, like what? You mean like corporate buybacks? You know, yeah, there were corporate buybacks. And yeah, the economy was doing pretty well, but I think we discounted the fact that it was doing pretty well because it actually became the most overvalued market in history. Not the highest PE ratios, that was back in 2000, but on a lot of levels, it got more overvalued even than 2000. But anyway, it rallied 1,047 points. In my view, most of that was due to comments about the China trade agreement, and 7,856 points on the Dow. And that translates to 36.2% for the Dow and 44.6% for the S&P. Pretty much on the hype of, you know, this China thing. And if you really think about the China trade agreement, you knew, I mean, Trump's done a great job, and he's done so many things that people aren't aware of because CNN and MSNBC aren't going to mention them to you. They will, you know, he could go out and walk on water or you know,
Yeah.
do whatever, and you would never, if it was something good, you'd never hear it. They select the news. It's unbelievable what's happened in this country, and it should make everybody mad. I mean, I would be mad if they did that and it was in favor of a president that I liked. It's just
Well, it was because he walked on the wrong water, or there was, you know, I mean, I can only imagine, yeah, how that would get twisted up. Anything. It doesn't matter what it is. It's
yeah, it's just crazy. It's just not right. And anyhow, so we get this good rally, and we're expecting this agreement, and he's done some great things. He's forced other countries to pay where we've gone in and provided military. Of course, we provided it to provide control too, but you know, that old game. But
and I think that crushed a lot of the deals, a lot of the private under the table deals that various members of our Congress, shadow government, they've made deals with foreign countries and foreign nations, you know, kind of like, you know, don't worry about it, you don't have to pay this. And then all of a sudden Trump comes in, upsets the apple cart, turns over the money changers' tables with his whip and goes, no more of that. You want to play, you're going to pay.
It's got to happen that way. It's just right. I mean, you take an oath. All these people are ignoring the oath of office that they took. I mean, blatantly ignoring it. They're making deals that are good for them, good for their crony buddies, not good for the United States.
Right.
And then most of us are watching it, and CNN and MSNBC is saying, "Oh, look at that! Oh, look what they've done!" And everybody just kind of nods up and down, like they've been drugged for the last 10 years. It's really sad what's happened to. I mean, I know what's happened. I know why it's happened. It's a planned agenda. It's been going ever since they made TV. JFK told us about it. If you want a Republican, Eisenhower told us about it. Aldous Huxley told us about it a year later. I mean, the warnings that came from Eisenhower and from JFK were only 3 months apart. And there were warnings before that. So, you know, and they were saying there's some kind of a monolithic evil group that really is running the country, you know, behind the scenes. And that kind of shocked people. And oh, excuse me, that was 60 years ago. And it hasn't changed. It's just gotten stronger, you know. So Trump's coming out to, why are they so angry with Trump? Oh, it's, you know, because he's got long blonde hair and doesn't say nice things occasionally. Well, excuse me, but the not nice things, if you really want to hear some not nice things, it's not the things that have come out of his mouth. Those are in response to the things that were said to other people about him that are in his family about 10 times worth. And where do you find a better family than, you know, I ask you, go find some billionaires out there, find some that have at least 4 children, and you find me some where they're 4 for 4, where all the kids are fine. And these kids, not only are they intelligent and productive, but they don't smoke, drink, or take drugs. Find that sometime in anybody's family where you got more than a couple kids. You know, I mean, that's a blessing. But anyway, what I was going to say is that the Chinese trade agreement, as much as they ballyhooed it and talked it up, no matter how good a job that Trump did, it wouldn't be that great of a deal for 2 reasons. Number one is the prior 4 presidents made crappy deals.
Yep.
You know, they were great for China and bad for the United States.
Right.
So that's number one. So China's used to that kind of deal. They're not going to agree to something that's significantly different than that. And oh, by the way, we like it just the way it is. Thank you very much. Mm-hmm. Well, Trump wasn't going to let that happen, and figured that, well, here's what we'll do. We'll do the we'll go ahead and do the tariffs here, and that'll be great. We'll just collect tariffs while you guys are figuring out whether you're going to do a trade deal with us or not. That's fine. And lo and behold, after all this time, and the other thing was, as far as not getting that good of a deal, China was pretty set. They're not going to agree to, a great deal that's to their detriment. So at the very best, he's just going to get something done that's much, much better than what Obama and the other guys, the Clinton and the two Bushes did before that.
Right.
He's just going to make a better deal, which is great, because at least it's going in the right direction. At least it's in our favor and so forth. But it never was going to be a great deal. So it shouldn't have gotten ballyhooed. He should have received a great deal of praise for doing the job that he did, because with China, with everybody else, they're going, take it or leave it. We don't need you. With us, it's a little bit different story. But look what happened. Now you've got a situation where, we finally got the trade deal, one that China didn't want. And what did we get? What was the reciprocation? Well, we got a coronavirus. So,
right.
We don't like the trade deal. How do you like this? And oh, by the way, just in case you guys haven't figured it out, long about the third or fourth quarter, we're going to be the #1 producer in the world. And watch and see. That might be the case.
That's a scary thought.
We're not going to be impressing anybody with everybody sitting home.
I just mentioned this to John earlier. I was shocked last night to find out, and I guess I should stay more up on geography and current events, but Wuhan has a population of 11 million people. For some reason, I thought of it as this sleepy little Chinese village with a wet seafood market, and goodness, 11 million.
No,
New York City's got 8.5 is all. Go ahead.
Wuhan is a big deal. Again, that book that we were talking about back 40 years ago, they talked about Wuhan, but Wuhan, I believe, is pretty fully 5G. I mean, they're ahead of the rest of us. And I'll have to find this thing to post on your site. But I saw something a few weeks ago about 5G really affecting this virus.
I was just going to ask you, have you heard that? To me, it's a conspiracy theory up to this point, because I haven't seen any scientific evidence to prove otherwise, but maybe you've actually looked into it. They say Africa, doesn't have many cases of the coronavirus because they don't have any 5G there yet.
Well, the 5G, I found this very interesting. And by the way, conspiracy theory, when you think about that, this is another thing that the elite have done to brainwash us. Give you another one, liberal. How about liberal? Well, gosh, that's a great term. I want to be a liberal, don't you? Well, you know what? I am a liberal. I'm a real liberal. Because I'm not just using the name to say what my political party is.
Okay.
You're a liberal, Dwayne. I'm a liberal, and I'll tell you why. Because we've got kind of a libertarian viewpoint.
Yeah.
I don't care what you do, so long as you don't hurt me or anybody else, and you follow the law. Other than that, I don't care if you eat meat or buy a gun or I don't care. I just none of my business. But are liberals like that? Oddly enough, no, they're not. They want to. They don't want you to buy. They don't want to
control everything.
They want you to do whatever they think is right to do, and they want a law passed to force you to do it. Excuse me, is that liberal? Because if it is, I just don't understand what the word means.
I saw a headline this morning along those lines that concerned me. Walmart, Costco, and Target are now banned from selling non-essential items such as clothing and electronics in parts of the U.S.
I wonder
they're
why.
Rope up. Well, because people are only supposed to be. Well, number one, the only reason they're able to be open is because they sell. They have a pharmacy and they sell groceries. So somebody figured out, well, it's not cool, but you should also be able to pick up a pair of blue jeans, or some new tennis shoes while you're there getting your groceries. It's just a draconian measure. I mean, they've locked us in our homes.
We're going to find out, Dwayne. I hope we're going to find out fairly soon that I don't think this is about a coronavirus. I mean, I clearly that's that's what's being pinned on it. But if you look at many of the past catastrophes in this country, they've happened coincidentally with other things that would be catastrophic in a different way. And most of those are the way the government has been handling things, and it's about to get exposed. We know that, if you've got information on Hillary Clinton and you're going to testify, you're going to die. You're not going to be here to do it.
And yeah, that's right.
There's a list of those, and sometimes it's suicide. The thing that they did down in Haiti, when the Clinton Foundation was down there, and of course they profited from it, and Haiti didn't. But the guy who came to expose the whole thing and was going to testify was found with a knife in his chest, and it was ruled as a suicide. Boy, that's the way I'd do it.
Well,
If I was
one guy that was shot in the forehead, shot in the back of the head with 2 different guns, and they ruled that suicide.
Yeah. Yeah, I always like to. Yeah, that's my hero. The guy who can take a bullet in the head and then reaches around and does it in the other direction. That's a heck of a guy. How about the guy who died of 13 with a nail gun with 13 nails in his head?
Yeah.
There's another hero for me. I'm probably going to stop after the first one.
David in the audience, he shared this. 5G was started in Italy in July of 2019.
And look who's getting hit hard.
Yeah, I think that's his point.
Well, of course, but that's the thing. There's a very good thing, and I'll send you that. I saw this initial one, and it was by like a common citizen. So you think, gee, maybe there's no credibility there. But what she was saying made a lot of sense. And I would not normally connect a virus with 5G. Why would you?
Yeah.
But it made pretty good sense. And Wuhan is very big on that. Now, I didn't know that about Italy, but there it is. Now, there's 2 places where it's happened. So and again, this 5G is more about control. Again, there's been a big move by these big Silicon Valley companies to put their noses in our business. They want to know what we're doing, what we're thinking, who we write to, what we say, who we talk to on the telephone, and oh, by the way, where are you right now?
Yeah.
So if that isn't, to me, that's gonna take all your guys from World War II that were such bad guys like Mussolini and Hitler and so forth, and make them look like kids. They at least let their people have some freedom.
Now, my wife has done a little bit of research into this thing, this 5G, and could it possibly be related to the coronavirus? Has something to do with the frequencies created. And there's a whole school of thought out there about certain frequencies can, create healing in the body, and it's a whole nother school of thought.
Very high frequency, and they've shown that if they want to, they can get in people's heads and do some stuff with a lot of this technology that they have, and it's very interesting that they create words like liberal and apply it to people who are intolerant.
Right.
And
Yeah,
the intolerant party has the name of liberals. They really ought to be called the intolerants. And if they don't like that, then they shouldn't be intolerant, I guess, right?
Yeah, David just shared that Phoenix has a small area in central Phoenix where 5G is functioning. I didn't know that, David.
What you ought to do is see, now I can find out how the counties are doing and what the numbers are, but if you can find out in Phoenix where that area is, and if it's in part of whatever county it's in, and see what the incidences are in there, it would be very interesting to find that out. The other thing I was just going to mention is that when you say conspiracy theory, which we're all taught to say, aren't we just talking about a different opinion?
Yeah.
Isn't it?
Yeah.
Isn't a conspiracy theory nothing more than somebody stating an opinion? Not a conspiracy theory. It's an altered opinion. It's a different viewpoint. Oh, that's a conspiracy theory because that doesn't agree with, what they're telling you on CNN. And we've got a brainwashing program here that's been doing darn well. And the brainwashing program says this. And oh, by the way, if you say anything other than that, well, that's a conspiracy theory.
The Verizon.
You must have a tinfoil hat on. I said, wait, pardon me, but what if this conspiracy theory holds water? And oh, by the way, what if your story really doesn't? Well, we don't want to go there. Listen, we've got these people brainwashed. They're not thinking. They're doing what we're telling them to do, and we like it that way. So keep your conspiracy theories to yourself. And that's what's gone on in America for decades. And finally, when you do something for a long time, all of a sudden, I was the last guy. I'm the dumbest guy on the block, because if you told me 20, 25 years ago that what's going on today with that people would be this dull of mind and this asleep, and that somebody would be out there telling us that there's 24 or 26 sexes, and boy, if you don't agree with that, we're going to make your life miserable. We've got a lobbying group and a thing that can ruin your life. You better believe that and apologize to the other 22 sexes or whatever it is that you disrespected. Right. I mean, I would have said, there's no way in the world America's going to do. I don't care if you're a Republican, Democrat, a believer, a non-believer, it doesn't matter. Nobody's going to think that way. Well, hey, that lets you know where I am.
I see, John. John, I see you in the audience there, but I've got your mic open. In fact, you're logged in twice. I got both your mics open, so if you want to pop in, go ahead. What you asked about the 5G in Phoenix, it says right here, the Verizon 5G network is active in downtown Phoenix in the areas of the Orpheum Theater, the Talking Stick Resort Arena, that's where they play basketball, Chase Field, wow, that's where the Diamondbacks play, Cityscape, that's the new shopping center they built in downtown Phoenix, and the Phoenix Convention Center. It can also be accessed all your high population campus. Now, go ahead, say that again.
All your high population places.
Very, very, very dense, especially because
concentrated population.
They have a new downtown ASU campus where there's just. See, I first moved into downtown Phoenix and officed there. Well, I lived there many years ago, back in 81, 82. It was like a ghost town. But then we opened an office downtown in 96. And that's when the whole downtown Phoenix revitalization started to kick into gear. And it's just like a different world. If you go down there now, 20 years later, I mean, there's the ASU campus. So there's thousands of people out on the streets moving about because of ASU. They've got a full-sized grocery store down there now. It's just amazing, absolutely amazing how downtown Phoenix has transformed.
Wow. So, boy, it's going to be interesting to see what your numbers are on that, in that area, as far as people being
getting this
virus, being affected by the virus. Yeah.
Yeah.
By the way, I was going to
go ahead.
On this chart, I meant to bring this up and show you. I won't name any names, but there's a fella who has been talking about a melt up in the market for a long time. Well over a year and a half. He was on podcasts and doing a big deal about the melt up right here. And then we got a 20% correction in the market, which I would think would devastate somebody to have that happen after talking about a melt up. And this is I believe they're the most read financial newsletter of all, I think. And that's certainly one of the ones, but I wouldn't be surprised if they were more read than anybody, because they send out stuff free and blast it all over the place. And then they make these heroes. They think they get a guy out of their mailroom and create a hero out of him for one reason or another. But then they have the two main guys, and one guy's been bearish and the other guy's been bullish. So, obviously, how do you're somebody's going to be right.
Sure.
But anyway, this other guy was really out there pushing it, having podcasts, had people on, this was, they make this guy sound like the smartest guy who ever came to Wall Street. Probably the guy who teach Jesus how to walk on water. Who knows what? He was a remarkable guy, but he was doing the melt up. Then you get a 20% drawdown. Now, I'm thinking of all the young guys that are in the market, and people that listen to that and figure, gee, I'm gonna make a fortune on this guy because he's a genius. I mean, they tell me that in the podcast, and they take their life savings and put it in the market. You get your 20% correction and get wiped out. Anyhow, but that's what happened there. Then we get down to the bottom on the Christmas rally, and now we're getting this China trade agreement. It's going to happen any day, and boom, we get a 44.6% rally off the low. Lo and behold, during the later portion of that, this melt-up guy is now out again doing podcasts with people singing his praises, and this melt-up's going to start. I mean, we've been in a 44.6% melt-up already, but he's talking about this melt-up that's going to take the market to the moon. Boom! Now we got a 35.4% correction. So I don't know how that guy can ever get back on and do a podcast, but I'll bet you we see him pretty soon. But anyway, I like him. I think he's a great indicator.
Jim Cramer. I don't know if this is who you're talking about or not, but
oh no, not at all. No, it's not. It
Jim
is
Cramer,
not.
He was on his TV show, Mad Money, and 2 weeks before Bear Stearns folded, he told everybody
Bear Stearns was in the '60s, and he told everybody to buy it.
He said there was no safer place that a person could put their money than in Bear Stearns. Then, after what happened. I'll never forget the episode. He shows up on his show after the deal, and he's in a little canoe, and he's like paddling the canoe, and the words that came out of his mouth were, "I told you, I warned you." Jim,
oh boy.
Don't you think we have this thing called video recorders? I mean, don't you think people have...
I can show them the video right now.
Evidence of, one of the other guys on CNBC did a YouTube video and called him out on it. And somehow CNBC was able to put out the fire because the one guy, it wasn't Santelli, it was one of the other guys. He was really upset that they were letting Cramer get away with this. Just blatantly lie to people and pretend like he had just told them, to get out of Bear Stearns, that there was an impending collapse coming.
He was very complimentary to Bear Stearns. Don't worry, there's no problem there. Bear Stearns was at 66 or 62, and in the matter of a week or so, it was at 2, and then it was nothing. So anyway, it's out there. What I was going to show you next here, I'm going to have to jump here pretty soon. Okay. I'm sorry, but what I wanted to show you is I was just looking at this and kind of sharing this with clients and saying, look, there's about 3 scenarios here, and I don't know which one it is, but the bullish case would be that this top that we had was a wave 3. We had this big ABC down for a wave 4, and we're now up on our way to set a new all-time high late in the summer or beyond, and that's the most bullish case. Could this be an ABC for an A wave, and then we do a ABC B wave, and then we come down for a C wave and then go up? Yeah, that could happen. But that or this would be the bullish case. The bearish case would have the top being in as a wave 5 back here. Then you would drop down in a 1, 2, and then it would be a 1, 2, 3, 4, 5 wave 3, wave 4, wave 5 for a perfect 5-wave decline into the March 23rd low for wave 1 down. We've had an A rally up, a B correction. We're in a C wave rally now. Maybe it'll go up to around 2,800 or 2,750 to 2,800. Who knows where? 50% retracement, make a wave to them. We go down and set new lows. And by the way, what that means is that we're probably locked up on lockdown until December. The economy's completely ruined, and there's no chance of it coming back. And this market's got a long way to go on the downside. Which is what the long wave cycle would say. This is what a lot of people are looking at here, but that's the bearish case. The problem I have with that is that I don't have any more news than anybody else does. I have no idea when they're going to end this lockdown. I don't even know if there should be a lockdown. We don't know that this virus is any worse than any other flu.
Yes, well said.
We're told that it is, but we get told all sorts of things that aren't true. So I don't know. My deal is I don't know.
An interesting case for that. I think it was last night.
Who did?
Tucker Carlson.
Oh, Tucker. Yeah.
And I don't want to minimize this thing. We have one of our members who he and his wife had the coronavirus. They were hospitalized. He was on Dr. Oz. He was on the show here with us a couple days ago and kind of told his story of all that they went through. So I don't want to...
How's he doing?
He's doing good. He's doing much better. And I don't want to minimize this for those that have been affected, but I'm also concerned about those who are sensationalizing this, I think, beyond where maybe it should be.
My feeling is...
I'm no doctor. I don't even play one on the radio, but...
Well, the thought on this, the other alternative that I was going to mention is, I believe they're going to have to put people back to work pretty soon. Within a month, somewhere like that. If they don't, this economy, something. And by the way, I believe. And again, it doesn't matter what I believe, but just to share with you what I believe is, I believe there's something going on here that has caused this to happen that doesn't have much to do with the flu. Now, whether it's a last stand situation by the globalists, or who knows if it's the last stand, maybe it's just a big play or what. But I can certainly tell you that there were problems in the repo market. They happened back in October. They happened again recently.
He's
There's
not
problems
about repossessing automobiles either, guys, but that's coming too. But he's talking about
the repo. right. The big repo market, but there was problems there. That's always there's problems in collateral. People want smart people who want collateral. They're going to put stuff up. I want collateral. I want good collateral. By the way, if I don't get the good collateral, I don't play. So there's those people. There's been a collateral issue. You can't just continue to throw debt out there with all of a sudden the debt turn. One of the things that's happened is when you've driven interest rates down real low, naturally people will be driven to get a higher return. And in order to get a higher return, by definition, you're buying lower quality. So the problem that goes on here is you've got a large sector of your people who buy debt buying poor quality. And then that quality shift went from treasuries, for example, over to the corporate bond market and to the junk bond market. And people were buying this junk because it paid more in interest. So you've got that
don't get paid.
But here's the big issue that I see. You didn't have anybody buying our treasuries in the first place, right? In other words, when the market was up at the high, we were having a hard time selling our treasuries.
That's right.
The Fed had to buy our treasuries. By the way, that Fed, what nice guys to do that and step up and allow our government to continue to operate by buying our treasuries. Aren't they a group of great guys? Oh, they're not doing it with their money? They're doing it with our money ultimately? Oh, well, let me rethink that. And by the way, who gave them permission to do it with our money?
They take our money so they can give it back to us with interest. Nice work if you can get it, I guess.
They get the interest.
Yeah, yeah.
They're the ones who are getting paid to do this. And oh, by the way, you've got a quote unquote foreign. I mean, not yeah, people owning the Fed, i.e., not government, although it's got the name of government, Federal Reserve.
What a clever,
what do these guys get to do?
To name it the Federal
What happens if you've got a good old boys club that's running the Federal Reserve? I wonder if they know when the market's going to go up and down. You know what? I'll bet they do. I'll bet they do. I wonder if you can make money if you know when the market's going to reverse directions. Probably so. Anyway, but I digress. Anyway, here's the point. Now we've added at least 2.2 trillion, and some people say that this is going to go up to 6 or 8 trillion, and maybe more. We've added that to an environment where they're not buying our debt. And there's one other problem. This little crazy virus happened to affect China. That's where it started. It's also affected Japan, and it's affected the other big 5, big 7, big 10, big whatever you want. They're all affected. Italy's affected, Spain's affected, everybody's affected. So I wonder whether the incentive for other nations to buy our debt would actually increase or decrease in that scenario. My guess is it's probably going to decrease. I think the other nations are going, buy your debt, who's going to buy ours? And therein lies a very good question. Who's going to buy our debt? Who's going to buy their debt? If nobody's buying debt in a world that's filled with debt, I think you got a problem. And somehow, I don't know why the market's up 400 points today on top of a 25 or 26% rally already.
Oh, you know what?
I'm not very smart. I'm apparently a little bit slow of mind because I don't get it. I'm sorry.
The Fed minutes were just released, guys, so watch for the market. The markets may jump here.
I think we're going to get, hopefully, typically we've got Easter Sunday coming up. We've got Friday, the market's not open, at least the stock market. Right. So when you have those 3-day weekends going into a holiday, generally, if the market's going up, it tends to kind of push it in that direction. And I'm hoping that's what happens. On this particular chart here, I'll leave you with this. My thought is, I don't know what they're going to do with this lockdown. I don't know what's going to happen with the virus. I don't know any of those things. But what seems logical to me in a world that doesn't have a heck of a lot of logic anymore is this. I would think that somewhere in the next month, we're going to come up with something that's going to be effective against this, and maybe just living for another month is going to be effective against it. Maybe it's just going to run through its course like all viruses do. Another thing that happens in another month is it's probably going to start to get a little bit warmer, and you find that all of these flu viruses happen in the winter, not in the summer. Right. So that, I think, might help it out. So whether they find anything or not, I think this thing's going to be on the way out. And I think it's got to be on the way out for all sorts of reasons other than that. So if that's the case, then it would seem to me that this count that we're looking at here, as wonderful as it is, and it's a beautiful count, 1, 2, 3, 4, 5, it's clear as a bell, the ABC. I mean, if I was writing a book on Elliott Wave, I could use that chart. But somehow, if I look at that, it kind of tells me that, gee, if this virus goes away, even if it just goes away for a while, we probably aren't going to have a third wave down. We may correct back down, but then we're probably going to go up. And by the way, summer rally and stuff like that, after we've had a 35% correction, even if things don't get better, here's what's going to happen. If that virus goes away and we're not on lockdown anymore and it's summer, there's 3 reasons for people to be real happy.
Yeah.
Got rid of the virus, summer's coming, and I'm not locked down anymore. I can go out and be with people. So that's going to vis-a-vis put a big smile on the face of Americans, even if maybe things are a lot worse than they were. People are going to be happy. and the stock market's going to go up, and we're going to get a bull market for all the wrong reasons. And I think that's what's going to happen. If that happens, then this count's not going to be right. So what should it be? It still could be wave 5 up there, but rather than being wave 1 down there, it's probably wave 3. And if it's wave 3, as opposed to wave 5, if that's a wave 3, then we've got our ABC, but rather than that being a wave 2, it becomes a wave 4, and then we go down because maybe we have some bad news on this thing, or we're still going to be in lockdown for a while, and maybe we go down into a wave 5 and test this lower, make a lower low, and then we turn. And that's the one that I'm kind of choosing, with virtually no knowledge on what's going to happen with this virus, but just what I think might be likely to happen. So anyway, that's my 2 cents worth. I don't think I got anything beyond this other than goodbye. Yeah, there it is. Goodbye.
Thanks, Garrett. Appreciate you very much.
Well, thank you so much, Dwayne. It's a pleasure to be with you, and all the best to your listeners. I hope everybody's doing okay and hanging in there.
All right, my friend. We'll talk to you again soon. Thanks so much.
Thank you. Thank you, Dwayne.
Bye-bye now.
Bye.
All right, guys. Back to the chart here. Now, let's talk for a second about, I have a lot of respect for Garrett, for his work. He understands things about markets I don't understand. He and John both are Elliotticians to a degree. I mean, they don't hang their hat on it. It's not the end-all be-all for them, but for many people it is. It can be quite complicated. They say if you put 10 Elliotticians in a room and ask them to count the waves, you're going to get 10 different wave counts. I mean, this could be an A wave rally unless this thing happens, and then it becomes the C of the D or the 1, 2, 3. Or I'm going to be honest. I never went down that path because I don't think I'm that smart. I honestly don't. Now, here's what I do know. As much confusion as there is, if you put 10 Elliotticians in a room together, you put 10 CFRN traders in a room together, there's no confusion. Nobody has to recount, recalculate, juggle. When price closes above the BBC, we anticipate higher prices. And that usually indicates a leg, right? And then once the market puts in a leg, what's it going to do? It's going to revert to the mean. That means it's going to pull back to the BBC. The pullback holds more often than it doesn't, as it did here. And when that candle starts printing green, that tells us it's holding. We get long and off we go. Oh, well, yeah, sure, that worked out over here. But what about over here? The same thing. No endless calculations. Is this the, and I'm not knocking that. I'm not knocking people who use it. I'm just being honest and saying it's too much for me. But I'm okay with that, because if I really thought it mattered, I would put in the time necessary. I would crack the books. I would do whatever it took to get that knowledge written on the tablet of my heart. But I don't need it. Why would I need it? It's right here. Right here today at 6:30 a.m. Eastern, between the 6:30 a.m., the beginning of the 6:30 a.m. candle and the 7 a.m. candle, this chart told me everything I needed to know. And then I got confirmation of it at 8:30. Just real simple. Oh, prices above the BBC, I better get long. Oh, prices below the BBC, I better get short. Now, I know lots of people, experienced traders, are listening to this going, but that guy's a nutcase, man. He just tries to make it oh so simple. Oh, okay, take me out and shoot me. My life's work has become helping people understand that the markets don't have to be this complicated, convoluted, expensive, never-ending buy this, buy this, buy that, subscribe to the other. It doesn't have to be that way. There is a natural rhythm, a natural flow that is a part of these markets as surely as the sun's going to rise tomorrow. And once you learn to see it, you can't unsee it. And once you see it, you'll realize you don't need to see anything else. Now, that doesn't mean we walk on water. We don't. We get stopped out just like everybody else. We always know, however, without counting anything, without, these algorithms, we don't need a supercomputer to crunch the numbers to tell us that the market's trying to go higher. And the market's bigger and faster and taller than any of us. So if the market's going to try to go higher, man, I'm going with it. Not going to argue with it. I'm not going to fight with it. I'm not going to try to convince it that it should do something different. When it clearly shows me what it's trying to do, I'm going to go for the ride. Count me in. Now, there are times when the market looks like it's going to do one thing and it does something else. This is what I dissected in the discussion group last night. Right here, the price closed above the BBC. So I said, in the discussion group, you can go there. In fact, I encourage you to go there. If you're on the trial, you have access. If you're not on the trial, check with Valerie, get on the trial so you can go there and read it. Okay? When price closed above the BBC, I said, all right, price is trying to go higher. When this candle started to build, I said, you know what, guys? Looks to me like this is a head fake. So here's what we did. I said, now I don't know that it's a head fake, but I kind of feel like it is. So we positioned ourselves here to be long, to take advantage of an up move, but we also had an alert to position ourselves down here in case the market fell apart. So here's the market above the BBC. We're looking for higher prices. Well, we did get the higher prices. Then we got this. And for those of you that weren't at your charts last night at 2 a.m. Eastern, this thing came out of nowhere. And it dropped like a rock, man, from 26.72 down to 26.32. That's a $2,000 red candle, 30 minutes. Okay? So what did price do? Did the bottom fall out? Did the markets fall apart? No. Price simply returned to support. After the big sell-off yesterday, market found support. Okay. Once the market finds support and can't go any lower, it's going to go look for resistance. This is where the head fake came in. This resistance price got above the BBC. It was gunning for that weekly trading zone overhead. Ran out of steam, couldn't make the trip, flipped over, came right back to support. Support sent it right back to resistance. Resistance sent it right back to support. And support sent it right back to resistance. And on the first trip up, it got sent back down to support. When the market finds resistance that it can't get through, it will always send price back to support. And when the support is found that it can't get through, it will send it back to resistance. Okay? So, up we go. No surprise that we would find resistance there, right? Based on the high of this candle, no surprise. So we come back to support. this time we make it through. Support and resistance. It's a never-ending cycle. Support held here and here and here and here, 30-minute candles. Resistance here and here, but this time it broke through the resistance. Well, that has to happen. Otherwise, we'd have a stagnant, range-bound market. So while price is always trading between support and resistance and back again, a never-ending cycle, at some point, the market's going to have to find new support or new resistance. Okay, we've come into an area here. Based on that swing high, we expect the market to run into good resistance right here. If it doesn't, that's okay. We're above the BBC. We know that if we're going to take any kind of a trade, it needs to be to the long side. On the 30-minute, when you're on the north side of the BBC, you should only be looking for long opportunities. When you're below on the 30-minute, on your smaller time frame, you should only be looking for shorting opportunities. Alex, Alex says, can we go back to the question where the guy got stopped out on the S&P? He never did finish answering the question, Alex. So, I'm not sure which market he was talking about, but the alert was to be long 2684. We put in a swing high at 2688.75, so that's a 4 3/4 point. So anybody who had 4 3/4 points on the table and didn't take their money off the table, then yes, you would get stopped out. That's how markets work. The market made 4 3/4 points available, then it pulled back to the BBC, which we expect, and then it triggered again and created an $1,800 opportunity. As a trader, you can take your money off the table at any point along the way. If your goal is 2 points a day, like you learn in the training room, well then you got it here, right? If you've created some different goal for yourself, well then hopefully you got it here. Now, when price traded through the weekly trading zone, what do we expect to happen? On this move, which is what we call the slice, that's where price slices through a zone like it's not even there. Only 3 things can happen at a weekly zone. The most likely is consolidation. The second most likely is rejection. The third and least likely, but it happens, is the slice. When the slice runs out of steam, this failed to be good resistance, so we look for price to come back and test it because we want to know if it's going to be good support. If it failed to be good resistance, is it going to be good support? The answer in this case is yes. Now, this is the highest weekly trading zone for the S&P this week. So let me put the other number in there. 2697. Okay. So from 2697 up to the swing high at 21, that's about a 24-point move. 50 bucks a point. What $1,200 per contract move. That's in this part here. Now, this was based on the Concierge, but we also had logic 247 alerts here. Back to my original discussion about the coin flip, right? an ordinary coin flipped 100 times statistically should give you 50 heads, 50 tails. But if you somehow affect that coin, if you put some kind of weight on one side or the other, whether it's super glue or something else, you can change the outcome. You can change the statistical percentage of times that it's going to come up, heads or tails, based upon how you weight the coin. So what we do with the markets, the way we take it from a coin flip or from just gambling, right, is by creating a definable edge. That's what we have. We have a definable edge. So when we enter a trade, we know that there is a higher probability of price going to our target before it goes to our stop loss. Without that, you are gambling. You have reduced it to a coin flip. So it's very important, whatever methodology that you use, whatever strategy, whatever indicators, you have to have faith in your definable edge. Got to have faith in your definable edge. And if you don't have faith in your definable edge, perhaps it's because you don't have a definable edge. I mean, there's all kinds of stuff out there for sale that promise a definable edge, that tell you they can read tomorrow's newspaper today. And man, when you're watching that sales video or reading that squeeze page, man, it sure sounds good. But man, once you get it on your machine and the markets go live, opening bell, and you start trying to duplicate what you saw in that video, it's like, whoa, did I get taken to the cleaners again? I said I was going to stop doing that. But the video, they're so compelling. Some of the most creative madmen in the world today. That's from that TV show, Mad Men. They were the ad guys from the 60s. That's when we really started to realize the power in advertising. If you've never watched that show, it's actually pretty good. Mad Men. The more compelling the argument, the more likely that you're going to pull out that credit card. Or maybe you don't even have to pull it out anymore because those 16 digits are kind of just tattooed on your frontal lobe because you've done it so many times. If you continue to go down the same road, you will continue to end up in the same place. I promise you. Anything else would defy the laws of physics. Right? Here's the good news. You don't have to do that anymore. You can let that be the old you and you can put on the new man. You can say, from this point forward, I'm simply going to understand how markets work, what my chart is telling me, and then whatever the next high probability move is, as the market starts to do it, I'm just going to do it along with the market. And somebody said, well, it's not that easy. I never said it was easy. Nothing about trading is easy. Never has been, never will be. But it can be simple. I mean, even here, you get a close above the BBC. Open of the next candle is 26.59. Put in a swing high at 26.80. That's a $1,000 move right there per contract. Price closes back below on the next candle, right at support. Well, you're not going to go short right here because you know you're at support. You've got to let price trade through this support area, then let price pull back. If price can hold the pullback, in other words, instead of heading back up, let's say we printed another candle to the downside, and then we pulled back up to the support area, and it now actually becomes good resistance. We don't want to be short here. We don't want to be short here. We want to be short right here. Right here. Before I get to that swing low, after I've tested and started to print lower, my goal is to get short and get out before I get to this swing low. When you see me drawing these little rectangles in the discussion group, it's called a window of, I call it a window of opportunity. Yeah, but it kept going. Look at what you left on the table. I don't care about what I left on the table. All I care about is what I can put in my pocket today. Now, that might sound crass, don't mean it to. The goal of a trader should be this: to make money daily. Nothing wrong with that. That's not being greedy. Trying to milk every possible tick out of a move, that might be considered greedy. But simply getting up every day, going to the office, or wherever the office is these days, some people are finding out that they don't have to. I know a lot of people are very concerned because their job is gone. It might not come back. We pray that it will. But a lot of people who've had to hunker down through this period of isolation are finding out. People right here under our roof, people listening to this show today, are finding out that they do have what it takes to become a trader. Doesn't happen overnight. You're not going to get rich quick. There's none of that. But because they've had the time to actually show up for the classes, to book mentoring sessions, because they're a little bit rattled because their job might not be coming back. So what was once sort of a fantasy, oh, I'd love to be a trader someday, for some people it's becoming a reality. Because they've showed up, paid attention, asked questions, they're starting to see that there is an underlying rhythm to the market. And even though we don't count the waves, our humble little strategy and our humble little indicators can point out to you what side of the market you need to be on. You can spot the high probability entry that is also a low risk entry. They're learning that it's okay to get stopped out, that it's getting stopped out is as much a part of trading as breathing is a part of life. The difference between a professional trader and someone who has not yet learned how to trade is when the person that's on the learning curve gets stopped out, they often get rattled and shaken and freaked out. Whereas a professional trader doesn't faze them. You guys see Michael trading in the morning in the room, and he gets stopped out. He doesn't moan or groan or lick his wounds. He just looks for the next opportunity. Because we know ahead of time a certain percentage of the trades that we take are going to get stopped out. That's a fact. There's no getting around it. It breaks my heart when I see people waste tens of thousands of dollars and years of their life chasing something that just doesn't exist. Accepting that being stopped out is as much a part of trading as breathing is a part of life. You're on the road to becoming a trader. It's in your hands. You have to decide. Will I continue to chase these shiny objects? And man, shiny objects show up in my inbox every day. I'm sure they show up in yours. Promises out the, I don't know if you can say wazoo on family radio. I don't think that's a bad word. How about kazoo? We'll play it safe. We'll say out the kazoo. Okay. But you get my point. And some people, their mind just won't let them go there. No, no, no. Stop it. Stop saying that. It can't be that simple. I've spent too many years, too much time, and bought too many things at great personal cost for you to come marching in here and try to tell me, oh, it's not easy, but it can be simple. Well, I've been saying the same thing, same song and dance every day for a lot of years. So ultimately, it comes down to you and the market. Bill says crude is ripping. Let's go see what ripping looks like. Yeah, that was a rip. Okay, I wonder if some news accompanied that. All right. I showed you the concierge alerts. I gave you a screenshot. So if you want to go through and track each one down, you can. The results were good. Very pleased with the results. Again, a recap of the logic alerts. 41 alerts issued, 30 actionable, still waiting on 8. 4 have been stopped out, 13%. Now, here's a look at the actual logic alerts for the week. We start Sunday night, 6 p.m. Eastern. That's when the market's open. We are in week 88. Last week, week 87. We had a total of 48 alerts, 45 actionable. 5 of them were stopped out, so we had 11% stop out last week. The average is 20%. This week, week 88, we started the week out with the S&P. Belong 2538 to 2540 to 2553. Alexa, 53 minus 38.
53 minus 38 is 15.
Okay. So 15 times 50, $700. Alexa, 15 times 50?
15 times 50 is 750.
Oh, 750. Okay. So, from the entry to the final target, $750 per contract traded. NQ, 7680 to 7800. That's from the entry to the target, 120 points, $20 a point, $2,400 per contract traded. Gold, 1647 to 1728. Well, I don't think we made it to 17. We didn't make it all the way to the final target on that one. The swing high of gold this week. Oh, yeah, I'm sorry, we did. Okay, so on that one, Alexa, 1728 minus 1647.
1,728 minus 1,647 is 81.
Alexa, 81 times 100.
81 times 100 is 8,100.
It's an $8,000 per contract alert. The first 3 trades of the week not only would pay for a passport, you could take a nice little vacation as you embark on your new career. And then there's the Russell, then we got stopped out on Crude. This may be the one we're still waiting on. S&P, Dow, Russell, NQ, still waiting, stopped out, S&P, NQ, Dow. This one just never triggered. This one only made it to the first target, I'm guessing. This one, NQ, this one never triggered. This was a short on the S&P. And this was a long on the S&P, so we had two-sided action. Both windows of opportunity were satisfied. There's the Dow, the Russell, and Crude. Now, if you're on the trial, you have access to all of this, and yes, the alerts do go out before they trigger. I had that question one time in a mentoring session. He said, man, wouldn't it be cool if you could send these out to people before it actually happened? I was flabbergasted, and I said, well, that's kind of how the whole thing works. So let's see what Bill says about Crude. Algeria oil minister says the emergency OPEC meeting tomorrow will discuss a massive reduction in production, which could reach 10 million barrels per day, according to Argus Media. Thanks for sharing that, Bill. So, all right. Does anybody have any questions? If you don't have any questions, we go to the good word for the day. And I get up and get out of here. Now, we've only got one trading day left this week. Friday's Good Friday. We'll all be spending, well, I would say we'll all be spending time at home with our family, but we've all been doing a lot of that lately. I can't encourage you enough to put this time to good use, because this thing will pass, and whether you go back to the same job or a different job, God willing, you'll have a job to go back to. But if you've always wondered, man, could I be a trader? Do I have what it takes? Why don't you find out? Won't cost you anything. You don't even have to put up a credit card. That's how committed we are to helping you find out if you can trade for a living. Yeah, we're going to charge you for it. The laborer is worthy of his wages. We make no bones about that. But for the trial, it won't cost you a dime. You get to spend 2 hours a day in the room with Michael, learning, asking questions. You get our platform, our indicators, live data so that you can practice what you learned in SEM so that you don't lose any real money. You have access to one-on-one mentoring, and you have access to the discussion group. And, you know, that just might be, well, it's one of the best things about the trial. Instead of just hearing me talk or hearing Michael talk, you get to hear from all these different traders. They come, they post their charts, they take what we've taught them and perhaps, you know, along with things they've learned in the past. And there's great discussions going on here. Last night, here's when we go, yeah, that we had talked about, was this a head fake? And there it was, the head fake. What is this? Gold 30-minute. The last chart I posted of gold, we were consolidating at the 62% fib. We've crept up to the 50% now and are above the BBC. Under normal conditions, a move higher in gold sends the indices lower and vice versa. We're still far from normal, but each day feels a little more like home. I support that. Here's an NQ 5-minute. Okay. Now, this is my either or principle I was talking about last night. This is a 5-minute chart of crude. One of two things is going to happen here. Price, we're at resistance. Price is either going to trade higher, take out this swing high, or price is going to close below the BBC, and then we'll have to deal with this obstacle, and then that brings us to the weekly trading zone below. This was the NQ when I first started to suspect that we might be dealing with a head fake. Let me scroll up a little bit. Quite possible this move we're seeing in the NQ may turn out to be a head fake. If not, our long alerts are in place on everything. So we had hedged each of the indices, the ES, the NQ, the Dow, and the Russell. If the market broke to the long side, we were prepared. We had our alerts set up. We knew what price we want to enter. If it broke to the downside, same thing. And it doesn't matter which way it breaks, as long as you know what you're going to do when it happens. Part of understanding the next high probability move includes knowing what will happen if the high probability thing doesn't happen. Either or. It's either going to do this or it's going to do this. It doesn't have any other options. In Phoenix today, it's either going to rain or it isn't going to rain. Highest probability is that it's not going to rain. See, the deck is stacked. Let's say there was a foreigner visiting our town, and I said to him, "Hey, you like to gamble?" And he leans back in his chair and says, "Well, I've been known to do a little gambling." And so I say to him, "I tell you what, I'm going to bet you $20. No. I'm going to make you a bet. Do you think it's going to rain or not rain?" And the guy goes, "I don't know." Because he doesn't know about Phoenix. He doesn't know it's the desert. Yeah? I said, "I tell you what, I'll make you a bet. I don't think it's going to rain. If it rains, I'm going to pay you $100. If it doesn't rain, you only have to pay me $50. And to a guy that's never been to Phoenix, that probably sounds like a fair wager, because we do have clouds in the sky today. We just don't expect anything to fall out of them. You see how I have a definable edge in that bet? I don't like to use gambling analogies, but you see, I have a definable edge. I know that in Phoenix it only rains like 14 days out of the year. So it's a really high probability it's not going to rain today. But the other person, the retail trader, he doesn't know that. Think about that. It's a business based on probabilities, and you can actually put the odds in your favor. When you go to the casino in Vegas, those tall towers with all the pretty lights, they didn't get there by being wrong. They got there by creating a set of rules that gives the house the edge. We've created a trading methodology that gives us the edge. When we put on a trade, there's a higher probability of it working out than not working out. And I don't have to count any waves. I don't have to memorize any stuff. And I'm not knocking Ellioticians. I know somebody going to send me an email. "Why you always hating on the Elliott people. I'm not. I respect them. They're smarter than I am. They understand that stuff. I don't. Part of understanding the next high probability move includes knowing what will happen if the high probability doesn't happen. I reduce it to an either or scenario. And I know that reducing it all to the lowest common denominator kind of takes a little bit of the excitement out of the chase, out of the hunt. I apologize. Every time you look at a chart, not only will you be able to see what the next logical move is, you'll also begin to understand that if this, whatever this is in this instance, if this fails to happen, well, there's only one other option. This. It's either going to rain or it's not. Feel the chains falling off? Freedom. Not only are some people finding a new profession in this mess that we're dealing with, they're finding that with that new profession, there's benefits like freedom. Travel anywhere in the world, any day of the week. Just make sure that your hotel has high-speed, reliable internet. Look at this beautiful Head and Shoulders that set up last night. That's something. So I'll let you scroll through and enjoy all the charts, all the stuff. If you're on the trial and you've not booked a one-on-one mentoring session yet, you should. All you got to do is click this. If you need to schedule a time outside of my normal hours, just get a hold of Valerie and she'll be happy to set it up for you. Okay? So lots and lots of stuff. You have access to it if you're on the trial. Oh, and can I put up the CTA again? Are you talking about the alerts? Okay, Valerie said she just sent them to you in Telegram. The one I said you could have a screenshot of? Well, if you're on the trial, you should have access to the alert channel. So, I'm guessing you have them. Should you? Thanks for doing that, Val. Anybody that needs a screenshot, here you go. There you go. All right. Good word for the day. Yesterday, we began talking about the importance of the cross. We'll continue with that today. 1 Corinthians 1:23 says, "We preach Christ crucified." Paul wrote, "For Jews request a sign, and Greeks seek after wisdom. But we preach Christ crucified. To the Jews a stumbling block, and to the Greeks foolishness. But to those who are called, both Jews and Greeks, Christ, the power of God and the wisdom of God." 1 Corinthians 1:22. There is no Jewish way to be saved. There's no Gentile way to be saved. There's only one way to be saved, the way of the cross. We all have the same need. We need to know what's right and do what's right. We need the wisdom to know what to do. then we need the power to do it. And Christ offers us both of these by the way of the cross. In his early ministry, when Billy Graham preached to a great crowd in Dallas, Texas, there was very little response to his message. As he was leaving the platform, an old man told him, "Your message was good, but you didn't preach the cross." Billy Graham went back to his hotel room, got on his knees, and wept. And he made a commitment to himself and God. There will never be a sermon that I preach that I don't preach Christ crucified. Starting that day, God used Billy Graham to win more people to Christ than almost any other preacher in recorded history. There's just enough ego in each of us to want to contribute to our salvation by doing good works, but we can't. The hymn writer Robert Lowry wrote, "What can wash away my sin? Nothing but the blood of Jesus. What can make me whole again? Nothing but the blood of Jesus. Oh, precious is the flow that makes me white as snow. No other fount I know, nothing but the blood of Jesus." And that's our good word for the day. Now again, the markets will be closed Friday in honor of Good Friday. We will be here tomorrow, full schedule. If you've been on the trial this week, you're coming up on a decision. What you've seen, what you've experienced, these alerts, the training, the indicators, the simplicity. If you're looking for something else, well, we don't have anything else. We don't have a million upsells. We don't have indicators of the week. Every week some new thing to pitch you and sell you. It's a one-shot deal. The passport is for life. If you'd like a price sheet, a spec sheet, if you need more information, reach out to Valerie. You can call her at 949-42-EMINI. That's 949-423-6464. Or send an email to support@cfrn.net. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.